What if instead of buying a liability or an expensive toy, what if we bought a true asset? What if we bought an investment? Let's model a real estate investment. Let's say we found a mid 1980s 6-unit apartment complex in pretty good condition. The down payment plus closing costs plus a small amount for renovations will cost us $150,000. Now, for the average investor, $150,000 might be a bit hard to come by. Maybe it's tied up in other assets or 401k. Luckily for us, we have this whole life insurance policy that we funded years ago, accruing for us all this time. Generally speaking, we can loan up to 90 to 95% of our cash value at any given time. As we can see from our example, we reintroduced the same strategy, but one major difference. We didn't pay back the loan for a long time. No principal, no interest payments for about 10 years. Again, unlike home mortgages or HELOCs where you have to make payments immediately, we don't have to pay back our whole life policy loan for years so long as we have adequate cash value. So in this example, our client purchases the property, stabilizes it, raises rents, collects the rental income, and holds it for about 10 years. The owner can collect the rent produced by the property as rental income, and his policy is still growing tax-deferred cash value in the background. Our policy has become the engine that can run itself, even with a $150,000 outstanding loan amount, of which we have made no loan payments during this 10-year period. This is one of the big ways that whole life insurance can build wealth for us over the long run: passive growth and liquidity access. And what about our client's exit on the investment? Well, he can simply refinance and pay back his policy loan or just sell the property outright. In our example, by his 30th policy year, he's paid back his policy loan with interest, and his cash value has gone from $259,793 and accrued in the background to $393,218 after his loan payback. That is an interest growth of $133,425 on his cash value, almost equal to the initial policy loan. So our whole life policy paid for our investment paid us rental income and capital appreciation when we refinance or sell, and we still accrued an additional $133,000 while we held our investment. We grew twice. We grew in our investment and we grew in our policy's cash value. I hope you can see why we see whole life insurance as the ultimate passive income and tax-free wealth building tool.